Trading day of 2026, a new year, a clean slate, fresh expectations for markets, businesses and investors. After a year that, tested resilience across currencies, capital markets and consumer confidence, 2026 opens with big questions. Where will growth come from? How will policy, shape outcomes, and which sectors are best positioned to outperform? Today we set the tone for the year ahead, tracking early market signals, examining the forces that will drive capital flows, and breaking down what businesses, investors, households should be watching from day one. I'm Ladi Williams. This is Business Morning. Let's get a check now what's playing out. When the markets are open here, we see as the first trading day in the oil market, and it's starting off, slightly higher, rebounding after annual loss since the oil market. Fresh gold returned to 25, climbed this morning about $61 up, saying, starting off strong. Starting off again, first trading that continues, WTI 57.90 up, so a lot of supported by concerns, targeted Russian oil pressure on the United States. So we see the same, prices this year. The price moves amid rising tensions between Russia and Ukraine, despite ongoing U.S.-led talks aimed at ending the nearly 4-year conflict, highlighting how, geopolitical risk remains a key driver for energy markets, even with the start of a new year right here in the oil market. So that's the picture right there. Right, let's look at other matters now. Nigeria's capital market is set to remain bullish in 2026, and that's according to the Central Bank of Nigeria. As bank recapitalization, rising investor confidence and supportive policy measures continue to drive market momentum. In its latest macroeconomic outlook for Nigeria in 2026, the Apex Bank says stronger bank balance sheets and deeper market activity from the recapitalization exercise are expected to support sustained growth across the equities market. Remember, that gave over 50% in 2025. The CBN also projects faster economic expansion this year, with GDP growth estimated at 4.49%, up from 3.89% in 2025. Underpinned by ongoing structural reforms and a gradually easing, monetary policy stance, setting a more constructive backdrop for investors as 2026 unfolds at this point. All right, in banking news this morning, First Bank has successfully completed its 500 billion Naira capital raise, meeting the Central Bank of Nigeria's minimum requirements for international banks, an important milestone in the ongoing sector recapitalization drive. The achievement underscores renewed investor confidence and stronger balance sheets among top-tier lenders, even as calls grow for higher threshold to further deepen financial stability. And this call is coming from Mr. Femi Otedola, who believes it is time to raise the minimum capital requirements for international banking licenses from 500 billion naira to at least 1 trillion. That's what he's calling for. He also commended President Tinubu for his bold reforms and the central bank governor for stabilizing Nigeria's foreign exchange market and monetary policy. So yeah, it's Q1. I guess it's going to be all about the banks for this quarter, watching who crosses the recap stage at this point. All right, more to come later on. All right, to the Securities and Exchange Commission, they say they're ready to prioritize mobilizing long-term funds to address Nigeria's infrastructure and sectoral gaps. SEC Director General Momotimi Agama made the announcement in his New Year message in Abuja. He stresses that in 2026, the SEC will facilitate the issuance of infrastructure, green and municipal bonds, as well as infrastructure-focused funds to attract domestic and international investments in roads, power, rail, housing, and digital infrastructure. Dr. Agama also highlights plans to boost agribusiness listings, revive REITs, introduce affordable housing bonds, and support SMEs in manufacturing, automotive, and pharmaceuticals, aiming to create jobs and strengthen local production. All right, let's, we're still doing, reviews, throwbacks into 2025. Well, Nigeria's financial market is closing 2025 on a largely positive note, shaped by, high interest rates, inflation, declining, even though elevated, and key economic reforms, while the stock market showed resilience, driven by selective, investor interest and corporate earnings, and fixed income market, remained attractive with elevated treasury bills and bond yields, reflecting tight monetary policy. Well, we have details in this next report on what played out mostly in 2025 in the markets. Take a listen.
2025 has been a defining year for Nigeria's financial market landscape, one shaped by bold reforms, elevated interest rates, and a gradual return of investor confidence. From record-breaking moments on the Nigerian exchange to high yields in the fixed income market, investors spent the year balancing opportunity with caution. The journey began against the backdrop of tight monetary policy, inflationary pressures, series of reforms such as the foreign exchange reform, tax reform, the Nigerian Insurance Industry Reform Act NIRA 2025, Investments and Securities Act ISA 2025, as well as the transition to a T+2 settlement cycle for equities. The all-share index of Nigerian Stock Exchange grew through leaps and bounds, crossing the 150,000 historical threshold for the first time in October, and has since continued to hit new highs despite profit-taking by investors. With a 51.19% year-to-date gain, Nigeria's stock market is effectively ranked among the top 10 best-performing stock markets globally in 2025 and the fourth best in Africa, according to the performance recorded as of December the 31st. In sectoral performance, the consumer goods counter delivered the best returns till date, with a 122.41% gain among its peers, due to the strong earning recoveries of companies, significant reduction in foreign exchange losses, and renewed investor confidence following key economic reforms. At the same time, the banking sector, which is a critical counter of the NGX, maintained a positive position driven by higher interest income, recapitalization expectation, and balance sheet expansion in a high-rate environment. Abiodun Adedotun, an equities trader at First Securities Brokers Limited, provides insightful comments regarding the bull run on the local bourse in 2025.
Right. 2025 has been a good year for the equities markets. Quite a lot of factors have contributed to the growth. Year to date, the market has done about 50% on the aggregate level, where we've seen some stocks do up to 500, 1,000%, year to date. And now, what are the major drivers? Of course, the fact that the economy has gone back into the normalcy, CBN is operating the way it should be. There's renewed investor confidence from the part of offshore investors. So funds naturally that will not come into Nigeria are beginning to find their way into Nigeria. The FX side of things also contributed significantly to it. FX has been fairly stable. Now, all these are metrics, you understand, that shows that the country is actually back on the right path, and this definitely would flow into various asset class. The equities market has enjoyed its own fair share in 2025, and we think there's still a lot of headroom. We don't think the market is well priced yet. We think there's still a lot of headroom. The market has been depressed for so long, and with the recapitalization efforts in the banks, the insurance, there's quite a lot, happening in the economy, and I think there's still a lot of headroom to be made in 2026 as well.
It's a similar picture for the fixed income market, which has been broadly profitable, marking a significant transition from the negative real return environment of previous years. Highlights of the performance indicates that the Treasury bills market has been one of the most profitable and stable asset classes for investors in 2025, across the 91-day, 182-day, and 364-day tenors, primarily due to the emergence of positive real returns. For the FGM bond market, performance has been exceptionally profitable, delivering a double win for investors with high fixed coupon income and significant capital gains from rising bond prices. These indicate that for the first time in several years, the yields on government debt has consistently outpaced the rate of inflation, allowing investors to grow their wealth in real terms rather than just nominal terms. For most of the year, Nigeria's central bank maintained a tight monetary policy stance, keeping the benchmark interest rate elevated in its bid to curb inflation and stabilize the economy. By late September, the CBN delivered its first and only interest rate cut in recent times, with a 25 basis point reduction, bringing the benchmark monetary policy rate from 27.5% to 27%. Caleb Alimi, chief dealer at Providence Bank, highlights several critical pillars that define fixed income activities in 2025.
What has shaped the market in 2025 has largely been the demand by the central bank, or largely by the Ministry of Finance or by the federal government of Nigeria through the central bank in terms of the Nigerian treasury bills, and also directly by the debt management office for the bonds market. What we've seen and what we can see is there's been an increased appetite in borrowing. On the Nigerian treasury bills, a total of 15 trillion was raised from the Nigerian treasury bills market at the highest rate of 22.62. This was at January 2025. And as of January, and then we saw the lowest rate on the one-year paper at 15.77%. That was somewhere around October. And then on the bond space, we've seen, the debt management office raise a total of about 5.2 trillion, from local bonds. And then this was at the highest rate of 22.6% also in January, and then lowest rate of about 15.85 sometime in October as well. They also raised sukuk of 300 billion and 19.75. What would shape next year is going to be the size of the borrowing. Already the size of the deficits for next year has been put at about 20 trillion, and we think it's going to increase. So we expect that it should be larger borrowing size by which is evidence in the size of the deficit. So we think that, or we expect that there'll be more borrowing next year, and then interest rates should be relatively stable between the 15% to like a 16.5 handle.
Looking ahead, analysts believe the trajectory of Nigeria's capital market and financial market next year will depend on the pace of inflation moderation, stability in the foreign exchange markets, consistency in monetary and fiscal policy coordination, as well as a gradual easing of interest rates by the CBN.
All right, to our first conversation now. Every December, Nigeria's credit market follows a familiar rhythm. Loan requests surge ahead of the festive season as households and businesses, raise cash, for travel, celebrations, and year-end obligations. During the holidays, borrowing slows. Then in January, demand, comes back sharply, driven by, school fees, rent, and return to business. But behind this, everyday behavior in Lagos and other urban centers is a deeper story, for banks and fintechs, pressure on liquidity, rising, non-performing loans risk, and tough decisions around, credit pricing and asset quality. Today, we're examining Nigeria's seasonal credit cycle, why it happens, how lenders manage it, and what borrowers should be doing differently to avoid, turning short-term cash needs into long-term debt problems. Well, joining me for this conversation, we have Adanne Aneni. She's a product lead Africa, Branch International Company Limited. Joining me right here in the studio. It's great to have you. Good morning. Happy New Year.
Hi. Good morning.
Happy first trading day of 2026.
Yes.
At this point, and all the festivities and all of that. Great to have you.
Thank you.
So, talk to me about what we're seeing there. I know you deal with a lot of borrowers. People want to, get liquidity. They look to you and say, please give me money. You have to give it to them most of the time. So tell me why, Dirty December creates such a, predictable, loan cycle, at this point. And what exactly did we see this Dirty December?
Oh, okay. First of all, Dirty December, amazing play with words.
Right.
Well, that's when the festivities are like in full swing in Nigeria. Those around, those from diaspora, everybody comes back to enjoy the festive seasons. And so we see a lot of demand for cash at that period or before that period. People want to prepare for the festivities. They want to buy concert tickets. They want to fix up their cars. They want to fix up their houses for people who will be visiting. And so there's a big demand for cash. Between the mid-November and the mid-December period, we see a spike in loan requests at that time because people want cash to be able to meet those demands before the December payments come in.
Right.
So, yeah.
So looking at this one, so far, there's the euphoria, of the celebrations. Then you now come into January, everybody. We have different sentiments, when it comes to January. Some say, oh, January is too long. It's taking too long, and, so many bills, to take care of in January. What do you see?
Well, what happens typically is that loan requests slow down during the festivities itself because people have liquidated investments that they've done over the months and people have requested for loans before. And so they have enjoyed themselves, they've spent so much. And then, of course, January hits and there are no negotiable spendings you have to do in January. You have to pay your rent, you have to pay school fees, you have to start your business again. And so there's that rush of demand again for more funds in January. Having not repaid the loans taken in December because we've used it for all our enjoyment, and then December payments have come in and we've also used it. And so we see rise before the festivities, a bit of slowdown during the festivities, and then in January it really spikes a lot, even higher than it was before the festivities in January.
So what are the, borrowing is one thing.
Yeah.
Paying back the principal, that's another thing. Then you also have interest rates. That's the big one.
Yeah.
At this point, and we know a lot of people struggle. When it comes to paying back. With the interest rates, being as high as sometimes 50%. We see some loan apps trying to take advantage of people. How do you manage setting those rates?
Okay, so the rates are set. Again, I'm speaking from a lender's perspective. The rates are set because of the risk that we have. We have a lot of high risk borrowers in Nigeria, and so that's why the rates are set like that. However, as one may predict or as one may expect, lenders don't typically increase rates during the festivities. We don't do that because the higher the rates, the less the ability to repay. Too, it affects the ability to repay. And so what we do typically during those high demand times is to focus on our most profitable users. So for instance, at Branch, we shift the focus to returning borrowers. And so we borrow or we lend more to returning borrowers, more than first-time borrowers. Because we've seen you, we know you. And so that's why we say stick to one app, an app that is established to have stayed long enough in Nigeria to have established themselves like Branch. We've been here for 10 years. And so stick with that app and keep increasing or building your credit portfolio for a very long time, for months. And then in December, when you want to come and take your that's December loans, we can give you a loan because we know you, we know your repayment capabilities, we know you're able to repay. And so those are some of the decisions we take during those high risk or high demand periods. We typically don't go for the rate increase because rate increase also has its downside with repayments.
Right, and definitely talking about first time borrowers, I'm sure they also want some love. The first time borrowers. And I remember an interesting conversation I had with a keke driver, recently. He told me, I was trying to transfer money to him, and he said, please, I don't want transfer. I'm owing this one. I'm owing that one. If the money enters there, it's gone. And I'm like, it's not the ideal way to take loans and not pay back on time. But what did we see in 2025? Did we see more responsible borrowing, or what was it like?
Well, I wouldn't say there was any sort of big improvement in our the borrowing behavior or the repayment behavior, to be exact. Nigerians are typically they borrow, and we have a lot of high risk borrowers in Nigeria because again of the economy that we have, and because people want to focus on the most immediate needs, which is just to eat, to be able to survive, to have water, to have shelter before they repay their loans. And so we haven't seen like a really big growth in repayment. Yeah, small businesses are repaying more now because the naira is a bit stable and income is a bit more predictable. But when it comes to consumer lending, we're still like at the stage where we are. We still have really high non-performing loan levels, and that's why we're trying to just use our models to kind of know who is who and who we should borrow to and who we should, make sure that we do business with, and we're not just doing business with anybody. Right.
So what are you seeing, for non-performing loans in 2025? Did you see an increase, or Is it moderating or
Well,
moderation?
it's not. There's not an increase. I think it's just the same as it was. However, in this, typically in January, we expect an increase in non-performing loans, even if it's just 1 basis point or 2 basis points, because we know that from the effects of December, where people have borrowed, some responsibly, some the other way, and people have spent a lot of money. And then you come into January, where I say that there are non-negotiable payments you have to make. You have to pay your rent, you have to send your children back to school, you have to restart your business. So we typically see a slowdown, just that first maybe 1 to 15 days delinquency, and then a lot of them do not fall into default, some of them do. And then from the end of January, we kind of see things start tapering off properly. People start repaying their loans, and we also see people's payments being delayed because some businesses haven't really started properly, and so they are unable to repay their loans. And so January, typically things slow down, but after January, things taper off and become
right. And we see post-festive period. That's the January back to school, business, some data out there. There's a sharp rebound. That's a trend. There are loan applications up about 10% to 25% above the baseline. Primary users, as you mentioned, school fees, rent, business restart, working capital. Definitely, we're seeing so many projections, for 2026. Some rosy, some not so, rosy. There's still that element of uncertainty. Coming into a new year, when it comes to interest rates, all the macros, at this point. So what are you seeing?
Well,
in 2026.
I'm saying, stabilizing interest rates, stabilizing, because as the Naira keeps stabilizing and as CBN keeps reducing the MPR rates, rates will keep coming down, both rates that you get as returns for your investments and rates that you're charged on loans. They're expected to keep coming down. That's the way it's supposed to work. And so when it keeps coming down, people are able to borrow more, people are able to do business more, people are able to repay better. And so we're seeing, or we're hoping, there's still the uncertainty right now, but we're hoping that as the year continues to go well and the Naira keeps maintaining its stability, we're able to keep bringing down rates, because the NPL, again, rates are just a reflection of risk. And so if the risks keep coming down, the rates will keep coming down, and that's what we'll see for the rest of the year.
Right. And what's your advice for some borrowers this year to be more responsible when it comes to borrowing?
I'll start with what I had already said before. Choose one partner, stick with that one partner, and build your credit history with that one partner. Stop jumping from app to app. It doesn't give you stability. So choose one partner who has a long run, and then stick and keep building your credit. You come today, you take something small, you come tomorrow, you give you something more, and like that, your credit history keeps growing, and you can access higher credit. Borrow for things that will give you returns. Do not borrow to spend lavishly, or do not borrow with the intention of not paying. You have to repay. Credit is amazing. I do credit for a living, so I know that credit is amazing. However, it's the bad application of credit that is bad. So if you borrow to do a business and you get your returns from your business and you repay your loan, you come back, you're going to be getting loans, and then you're going to be able to do higher and bigger turnovers. So please, borrow responsibly. Borrow, but borrow responsibly. Use it properly. Borrow on predictable income, so you know you're going to repay. You know when you're going to get this money back and you're going to be able to repay. So borrow one steady partner. It's important to build your credit history with one steady partner. Borrow responsibly, use it for something good, and then borrow based on money that you're sure is coming in.
Right. And have you had cases where someone actually borrowed money? You can't even find them at all.
Oh, absolutely. Yeah.
What's that like?
Oh, but people borrow, and then you call their numbers maybe when it's gone into default, and you can't even reach them. And then you reach some, and they don't want to repay. They just say, I don't have the money. I'm not going to repay. And so what we do, which is what every other person is expected to do, is to report to the credit bureaus or report to CBN. We don't have in branch we practice ethical collections. We don't do the popular coming to your business to come lock it up or calling your contacts.
You don't beat anybody up?
No, we don't do that. We practice ethical collections. However, what we can do is we report it to the credit bureaus, and in some extreme cases, we can actually block your accounts.
Right.
Yes.
Because I've seen, some people, I feel they feel invisible. Like, they cannot be found out.
Yeah.
What happens to that person's, credit rating, really?
Oh yeah, your
Can
credit.
you go anywhere else and
Well,
if you,
right now,
yeah.
because there's so many apps and there are so many platforms that are not plugged into the credit bureau system that we have in Nigeria. Yeah, you could go to somewhere smaller institution and you'll be able to get a loan, but you'll not be able to get a loan from the mainstream institutions. You'll not be able to get a loan from a consumer bank, a bigger bank. You'll not be able to get from bigger institutions like ours or our peers. But you could go to smaller companies and still be able to access
Maybe loan
loans.
sharks.
Probably, or just I don't know, mom and pop shops, so somebody just borrow it. So you could, but you won't be able to build a business or build a proper reputation based on that, because once you borrow, it's against your BVN, not just against your accounts. So it's against your BVN. So we know you. We know that you're owing. We really can't do much to you other than to make sure that you're enabled to access further credits if you need that.
And credit is good.
Oh, credit is amazing.
You shouldn't play with credit.
Don't play with credit.
All right, let's look at regulation.
Okay.
In 2025, the FCCPC very vocal. Most of last year, 2025, trying to protect the consumers at this point. So, how would you gauge regulation in 2025? Did it stifle business for people like you? What did it do, or did it help?
No, it didn't. I think it kind of helped, because what the FCCPC did was to kind of create that knowledge that there's some lenders who are certified to lend in Nigeria. Not everybody. And those other side lenders who were kind of competing with us were shut down. Some of their apps were removed from the App Store, and so it was less competition, bad competition for us. And so, we were able to get more users and all. And so it didn't stifle business. We weren't in any controversial, we weren't doing anything that wasn't, allowed by FCPC. So we're very good. And, FCPC is protecting consumers. We don't want people to be able to, use your pictures to create obituaries or to call your contacts when you're owing. Those things are not okay. And so that's what the regulator is here to do. They're not there to stifle business. I don't think in the large scheme of things, they did stifle business for the legitimate borrowers or the legitimate lenders. No, they didn't.
All right. So a brand new year. We do hope, credit flows.
Yes.
Affordable credit, and everyone, pays back. When you take that loan, you pay back, and all of us, grow.
Let's just keep reducing the risk. As the risk reduces, the pricing reduces.
The pricing.
Risk reduces, pricing reduces.
Okay, fantastic. Thank you so much. Dan Anene is the product lead of Africa, Branch International Company Limited. Thank you for coming on the show today.
Thank you very much, Laddie, and Happy New Year.
Happy New Year. All right, we'll take a break now. When we come back, we get a sense of what to expect, for entrepreneurs, doing business in Nigeria and maybe, abroad. What's it like? That's in a moment. Just stay with us. right, as Nigerian businesses, navigate a tougher global trade environment and a rapidly evolving domestic market, access to markets, capital, and efficient trade channels have become a defining factor for growth. 2025, a year of adjustment, for many consumer-facing businesses, shaped by, a stable currency, that's not bad, shifting consumer demand and changing trade, dynamics. So what lessons stand out and what should businesses be preparing for in 2026? Joining me for this conversation, we have Ehime Aigbe. She's the founder and CEO of Sweet Kiwi, and we'll review what's played out so far. Great to have you. Good morning. Happy New Year.
Good morning. Happy New Year to you as well.
Yeah, so I know you do business in and out of Nigeria. Yeah, talk to me about 2025. We like to take stock because somehow, it gives us direction into the new year. What stood out for you, in 2025?
I would say in 2025, doing business was the international trade or international markets. There was a lot of volatility, especially because a lot of the trade policies that were changing in the U.S. and often very unstable. There was definitely opportunities, just as there were problems. I think even in those problems, there were definitely opportunities, especially for businesses in Africa. And I think we saw like growth with Africa trade, even Nigeria, just the growth in how much goods were being exported, just overall in general. But the gaps I would say I saw was it was a lot of commodities, and there's still a lot of big room for processing and manufacturing so that we could earn more of the dollar of the final cost price of the goods.
Yeah, because it's quite interesting, analyzing the, strong or best performing currencies of, 2025. And most of the time, it was due to, gold exports because of rising gold prices and, some other, interesting metals that most of these countries, export. But, did we see some kind of improvement, with some Nigerians, sending out finished products?
Absolutely.
To international markets.
Absolutely. I think we've seen a lot of growth with more processed goods getting into international markets. I've seen brands, for example, like Real Fruit, now exporting to major retailers in the U.S. and being accepted into brands like, I think they're now in TJ Maxx, across the U.S. and Canada, possibly in other countries. There's definitely room for it. There's room for processing. There's room for us to catch up with the rest of the market and process the goods that we have. Something I've come to recognize is a lot of the goods that we have, a lot of the natural resources, hibiscus, cashews, these are things that are in high demand in the international markets. A lot of the innovation that's happening in the more sophisticated markets start with a lot of the natural ingredients that we have and sometimes take for granted. And there's a lot of growth and room for growth in those commodities for processing into very innovative finished products. One of the things that I saw that was so exciting to me was I saw a company that does akara chips. Akara chips. And, Americans loved it, and they really took to it.
Wow, that's interesting. I'm trying to figure out how that would taste, but I guess it would be like chips, maybe plantain chips. Akara.
But with akara.
Yeah. I'll try that out. But, definitely, looking at, what's played out so far, I seem to have noticed that fashion brands in Nigeria, they seem to be finding a market out there.
Absolutely.
And I see some of them, pricing their goods in dollars.
Absolutely.
And it seems they're getting orders, coming from out there. But what I've noticed is they get really pricey. And sometimes you see some of these brands that maybe they're about 4 years or so. So the brands are not really that known, but their products are really expensive.
Yeah.
And I'm wondering how they're able to, do that. Because you respect a brand that's, mature, that's been there, everyone knows you, then somehow your prices, how do you marry that?
I think the rise of social media, one of the things I was going to say is that we're now in a global economy. What you're doing all the way in Lagos, Nigeria is being seen all the way in Atlanta, it's been seen in New York at the same time. And especially when it comes to something like fashion, we women, we love to look good, we love to feel good. If we see something online that looks good, even though it's coming all the way from Nigeria, we want it. And so a brand that's maybe not well known here, but has developed some notoriety on social media can definitely demand a high price. Because if I was an American, I was buying something here that was really expensive. For me in America, by the time you convert it to dollars, it's nothing compared to if I got someone to tailor make something for me in America. So they feel like they're getting a big, that it's a big win for them. I have nieces who've never been to Nigeria, who every time they have some type of African gathering want to make outfits that are made in Nigeria. In fact, one day we were having a conversation because I saw the dresses and I'm like, how did you have this made? Oh, we found the girl on Instagram. We made this and, oh, it wasn't too expensive, on their front. And I think that globalization, and I keep saying that we're all basically one huge country now because we're all watching each other on these social media channels, which has unified us way more. There's hardly any borders anymore. And now you can have something made in Nigeria, have it delivered straight to your house in DC or in California. So especially when it comes to fashion, that gap has been closed, especially because there are no regulations like when it comes to the food industry. If you're mailing in something that's food-based, has to go through the FDA, has to meet certain requirements. So I feel like the fashion industry is able to break through those barriers a lot quicker. All you have to do is make something that's really stylish, really trendy, and obviously have an audience on social media. And I think a lot of people in the fashion industry have really cracked that. And we're seeing so much growth in that industry. We're seeing them being able to demand, a higher price for their goods. And, in conversation with a lot of them, even producing here in Nigeria can be expensive. The cost of diesel, the cost of just being able to run and operate, taxes and everything else, and they have to be profitable.
Right. Yeah, we did hear from Mr. Dangote saying that he prices exports cheaper than what we sell here because of what you just mentioned now. So I know you do business abroad too. You also have a business here in Nigeria. What was it like doing business in the U.S. in 2025? What Trump presidency? What's changed?
A lot of policies changed for us. A lot of the policies around immigration, a lot of policies just around how we do business, access to finance. A lot of things changed so quickly. Also, the trade things that came down in terms of tariffs that were put on any imports was a big issue as well. And a lot of businesses have been trying to navigate what that looks like in the new America with the new policies. So for us, that looks like being more local. How do we source local? How do we find more local things for our products? And that's been a huge change for us also because we work directly with farmers. The big impact around ICE and the raids, a lot of people who work with farmers are not maybe necessarily legal, or I'm trying to find the best formal way to put that. But those ICE raids were big disruptors in any industry that depends heavily on farming.
Right. So how would you say, diaspora businessmen and women, how would you say they performed, in 2025? Were they able to, meet up, with revenue and, some of the policy changes?
I think it was a tough year for everybody. I also witnessed a lot of businesses closing down and shutting down, not being able to,
That's in the
to
US.
grow in the US. And I also witnessed just businesses not being able to raise funding. Because investors are very skeptical. It's a tough time with a lot of uncertainty, and it's not the best time for investors to invest in things. Everyone's trying to hold on to their funds because everything is so uncertain. They don't know what's coming down the pipeline. And I think a big thing is us getting to a place of stability so that things are more predictable, because that's what allows more investment in the system.
So that means looking at 2025 in the US, doing business, unpredictability. Right. And so how did you say 2026 is going? Because we still have those same issues here. So what are you seeing? How do you think some of these businesses can, navigate some of these uncertainties, doing business in the U.S. and, having to, go through all some of these changing policies we're seeing there?
I think for us as aligning, trying to understand the direction that the administration is trying to go in and aligning with that. They have an American first mentality, trying to align with that and see how we align also with what the administration is trying to achieve. The truth is, as much as, you want to be an American first, there are just some goods and, things that don't grow in America. Cashews don't grow in America. Americans love cashews. Hibiscus doesn't grow in America. They love hibiscus. So it's how do you align? Because they really don't have these products. So how do you stand out? And I think this is where the government comes in, and we need to start doing more advocacy. and outreach to have conversations around these products that are really unique to Africa. How do we open a pathway to allowing these goods come in and removing the tariffs? And I think sometimes we're all concerned about, oh, this policy, Trump's put out this policy, but is there anyone engaging? Is there anyone advocating for Africa, as a trade bloc? Do we have any advocates? Is there anyone speaking on our behalf? A lot of things happen, like the shutting down of USAID, the shutting down of Prosper Africa. One of the things that people don't know is that Prosper Africa was actually started by the Trump administration. But do they know that? Is anyone having these conversations? Is anyone reminding him that, oh, this was your initiative? It could have been shut down because it was tied to USAID, and maybe he just thought, oh, it's a part of USAID. But he actually started that initiative, and there must have been a reason why. But is anyone reminding him? Because also, the people around his administrations have changed from the last time. And maybe these new people don't even have that information. I feel like even with how we feel about government, we always have to engage. On the private sector, even as countries engage with the US to see what are the pathways. It's very obvious to see what their concerns are. They want less dependency on China, but maybe they're open to a little bit of manufacturing in Africa. But who's advocating for that?
Right, and with a Trump-led U.S., at this point, who do you think should speak for Africa, at this point? Or do you think we should speak individually, as African countries? What do you think we should do here?
I think that we need to be a bit more united in how and be a big voice block, even if it's just West Africa, even if it's just South Africa, or East Africa, but we need to start being a little more united. So as a U.S. business, if you go to any other country, they have U.S. economic blocks or offices where you can go to and say, they're called the American Chambers. So you go to AmCham and say, hey, I want to do business in Nigeria. I want to do business in South Korea. And then they help you. They open up a map. And I kept thinking to myself, but why do we not have an African Chambers? Maybe it's a little bit more expensive for Nigeria to have a Nigerian Chambers in every country. But what if, as a bloc, we could have an African Chambers that's doing the work of opening up trade in different countries? Right. And so as an African, you have a business and you want to come into the U.S., your first stop should be the African Chambers.
That makes sense. Yeah, well, I think we should explore that. Thanks, for that. But let's bring it down here, because you also do business in Nigeria. Yeah. Tax laws, effect yesterday, 1st of January. What are you doing, right now to align, at this point?
I think, obviously, compliance, but we're trying to really understand the laws, and really align and see, where do we have points where we want to protest some of the tax laws? Because I think our concerns are always around multiple taxation and making sure that we're being taxed fairly, but also beyond that, that we're receiving the benefits of the taxes that we're paying for. And a big concern for us is we're paying these taxes, but we still are generating our own power. We're still providing our own security. We're still the ones paving our roads. We're repairing our cars every other day. So we also have all these other informal taxes that come out of the fact that we're not getting the benefits of the taxes that we're already paying. And so a conversation that I've had more recently is, how do we start to drive some accountability for the government, so that they're accountable to us about how our funds are being used?
Right. So at this point, do you think it will cost businesses more to try and understand, these new tax laws and compliance? What are you budgeting, at this time to make that reality? At this
time, we have meetings scheduled this week with attorneys, with tax professionals, to understand how it affects the whole chain of team members, from the ones that are not earning up to the gap to the ones, because a lot of things have to change in how we're also deducting taxes from our staff, our team members, to also ensuring that we're compliant. Something that was brought to my attention is that consumption tax may be going away. So there's all these adjustments that needs to be made. But I think the first step is really understanding all of the laws and how it applies to us specifically.
Right. So, looking at 2026, definitely, where are you seeing opportunities, for, small businesses, entrepreneurs that, are looking for, that great opportunity, in 2026? What are you seeing so far?
I would say for me is innovation in food, beauty, fashion, is to continue innovating and trying to reach a wider audience. a broader audience. There's a lot of people, there's a lot of places that are doing the work. We were on a trade mission with Afrexim in last year, October, in Germany, and we were able to meet a lot of international buyers that are looking to buy from Africa. There's a lot of opportunity within Africa itself to distribute our products too. But I think it's adding value into the agricultural value chain. I think that's where the big opportunity is.
Right. All right. So brand new year, and definitely we're hoping, for the best,
Okay.
and businesses can actually do business in a fantastic environment that helps everybody. But I still hear optimism
Of course.
in your voice,
Of course.
going into 2026. Thank you so much for coming on today. Ahime
Thank you so
Abrace
much.
is a founder and CEO of Sweet Kiwi.
Thank
you for
you so
coming on
much.
today.
Thank you for having me.
All right. We'll take a moment now. All right, let's get a check on what's playing out in the global scene. At this point, it's a brand new trading year, and definitely the markets are buzzing right now. But let's get some top stories now playing out. We see Tesla, that's their registration in Norway, that increased by about 89.1% in December compared to the same month a year earlier, according to registration data released today. The electric vehicle maker recorded 5,679 new vehicle registrations in Norway during December, marking a substantial rise from the previous year's figures there. Norway has been at the forefront of electric vehicle adoption globally, with the country's data often viewed as an indicator of consumer trends in the EV market. All right, we see LIDL-GB, the British arm of the German supermarket group, reported a 10% year-on-year rise in Christmas sales today, with turnover exceeding £1.1 billion, about $1.48 billion for the 4 weeks to December 24. The retailer, which currently ranks as Britain's sixth biggest grocer, said nearly 51 million customers visited its stores during the period, representing an 8% increase compared to the previous year. According to LIDL-GB, best-selling products included cheese, truffles, hand-cooked crisps and flavors such as baked camembert and hot honey, and seasonal fruits and vegetables. There was high demand right there. To other countries now, the Turkish manufacturing sector moved closer to stabilization in December as business conditions moderated only slightly at the end of 2025, and that's according to the Istanbul Chamber of Industry Turkey Manufacturing PMI. The headline PMI rose to 48.9 points in December from 48.0 in November, marking the second consecutive monthly increase, while still below the 50 points no change mark. The December reading indicates the least marked slowdown in 12 months. New orders eased the smallest degree since March 2024, with some firms reporting improvements in customer demand. Production was scaled back for the 21st consecutive month, but at the slowest pace in a year. Still looking at manufacturing sector there, the Philippines manufacturing sector showed signs of recovery in December, ending the fourth quarter on a positive note after several months of contraction. The S&P Global Philippines Manufacturing Purchasing Managers Index rose to 50.2 points in December from 47.4 in November, moving back above the neutral 50-point mark that separates growth from contraction. That's according to data released today. New orders increased for the first time since August, though at a modest pace. This an upturn in new work prompted manufacturers to resume purchasing activity, which expanded at the fastest rate since August. That's in the Philippines. Also, top stories today. South Korea's manufacturing sector showed signs of improvement in December as the Purchasing Managers Index rose above the 50-point mark for the first time since September, according to data released today. The seasonally adjusted S&P Global South Korea Manufacturing PMI registered about 50.1. That's 50.1 points in December, up from 49.4 in November, indicating a renewed, albeit fractional, improvement in the health of the South Korean manufacturing economy. All right, so those are the top stories right there in the global space. Markets are already buzzing right now. Yesterday was just India that was trading, but US, Asia, all the other markets opening today. We'll give you more updates later on, but that's it on what's playing out in the global economy. Right, and it's still the first trading day of 2026, and taking a peek into the local bourse this morning, that's on investing.com. We're seeing most actively traded stocks right now: Chams, Austin Lars, Livin, Trust Mortgage Bank, McNichols, Caverton Offshore. Support is in the green right now, 0.10%, 155,770 points. I'll bring you more updates on what's really playing out on this first trading day. That's at 1:30. We'll find out how the markets are kicking off 2026. Who's starting off strong? Who's getting the profit taking at this time? I'll give you all of those updates later on. Thank you for watching. And again, Happy New Year. Hope it's a profitable one. Bye for now.